Good afternoon, guys. My name is Crypto Cape, and today I want us to do a tutorial on price action. I know most of you will be waiting for this, as I've been asked in DM that's when is price action video coming out, and supply and demand. So today we have price action. If you have been following my videos, you would have heard me saying more times that price action this, price action that. So today we have to find out what exactly is price action and how we can analyze candlesticks formations using price action, solely price action, without the use of indicators or even volumes. And price action, you will realize, is just a normal name we call price movements and whatever price forms during the day. So we take those formations and we interpret it to mean something. So according to Wikipedia, price action is a method of billable negotiation in the analysis of the basic movements of the price to generate signals of entry and exit in trades, and that stands out for its reliability and for not requiring the use of indicators. That is Wikipedia. And according to me, price action is an art of technical analysis that require the core use of price movements to generate entry and exit signals along with invalidation levels without the use of indicators, even volume. This is what traders refer to as naked charting. The art of trading price action with volume is no longer sole price action, rather it is volume price analysis. Price action leads while indicators follow. That is why we do say indicators lag, right? So majority of indicators take their data from price. So if there is no price action, there wouldn't be an indicator action. And this is why indicators lag behind price. By this, we can say price action is an approach to future price predictions with the use of only candlesticks. Some of the studies used in aiding price action analysis includes trend lines, chart patterns, candlesticks pattern, which can also be referred to as price action pattern, support and resistance, supply and demand, Wyckoff, and many others. We will be looking into some basic price action patterns in this video. Price tells a story with every candle formation and patterns. Hence, we have single candle patterns, two candle patterns, and even three candle patterns. Even we have four candle patterns as well, all of which tell different stories even with the same setup. We will try to see some of these stories in this lesson as well. Also, if time permits, we will look into how we can combine all of this together and see how we can predict reversals or corrections and pullback with price action alone without the use of indicators or volume. So, moving on. We have price action patterns, which is the basics of why we are here today, identifying price action patterns. So, price action or candlesticks pattern are candle formations that occur due to buying and selling pressures weighed against each other. Let me take that again. Price action or candlesticks pattern are candle formations that occur due to buying and selling pressures weighed against each other. Price action patterns can form at any area on the chart, but forming at some specific points has more precedence over another. Hence, we have reversal patterns and continuation patterns. Each candle tells a story, either with the candle body or the wicks. We will try to understand what price is telling us with the stories they tell. How the story ends is what gives rise to patterns. Some people do not care to understand the story being told or reason why a candle forms a pattern it did. But since they have a cheat sheet like the one below, they are good to go. Do not forget that even the same pattern can tell different stories. Hence, it is better to understand the story behind price action to be able to take an informed decision. Just like we have suspense in movies, where you can watch majority part of a movie clip and still do not understand some things from the movie. Not until the movie ends, before you have an understanding of what they are trying to tell you. The same happens with price action. Not until the candle closes before you are certain of the story is telling. Any decision you make before the closure of the candle is a decision solely based on hopes and emotions. And we know that emotional trading leads nowhere. So, as you can see in the image, we have several different types of candlesticks patterns, which is also price action patterns. Some of which I will talk about how to use and read or listen to the story is telling in different forms. This my method of reading the candle story and story the prices are wicks there is not found anywhere. So I class this as an advanced method of reading price in a beginner's lesson. And it is in a simplified manner for that matter. So this helps us and imbibe in us a deep understanding of what transpired and led to the formation of the price candle. If you have taken a look at the image here, you would have seen some things you are familiar with quite all right. We have the spinning top, which is a neutral candlestick pattern. The doji, which is also a neutral candlestick pattern. The white marubozu and the black marubozu. I won't even be talking about that. As you can see, it's just shows a single bullish candle and a single strong bearish candle. Then we have the hammer, which happens to be a bullish setup. The hanging man, which is bearish. The inverted hammer, which is bullish. Shooting star, which is bearish. Then we have the bullish engulfing. You will be familiar with this definitely, which is also bullish, as in it is in the name. So bearish engulfing also, which is also bearish. Tweezer top, which is bearish. I wanted to be talking about Tweezer top because they are not that common as well. I will be talking about the common ones. Then the morning star, that is bullish. This is actually a 3 candle setup and it is a doji as well. But because of the 3 candle setup it has, it becomes either bullish or bearish, and it has the potential of causing reversals. That is the morning star and evening star. Then the 3 white soldiers, which is also bullish. 3 black crows, bearish. 3 inside up, bullish. And 3 inside down, which they say is bearish. But we should be able to understand the story behind these bullish candles and bearish candles for us to be able to ascertain that yes, this is really bearish and this is truly bullish, because sometimes we expect them to cause either reversals, but they do not, they fail. That is because we take them as they are with their names. Bullish candle structure, we go in for the trade, whereas how it forms, where it forms, all matters. If we do not listen to the story it's telling and where it is telling that story, we will keep missing trade, we will keep losing trades. So let's proceed. Here I have reversal patterns. These are candlestick patterns that indicate price is about to reverse and change its direction. We have both bearish and bullish reversal patterns. They are technically the same, but inverted. Examples of reversal patterns are pin bars and engulfing candlesticks. Like you have seen in the previous slide, the image, we have engulfing candlesticks there, and we have pin bars, which is the one they refer to as hammer, inverted hammer, hanging man. They are all pin bars. So we also have continuation patterns. These are patterns that inform analysts that price is most likely to continue in its current direction. Please note that some continuation patterns can as well signal reversals. Also, some reversal patterns can also signal continuation. That is sure. That is why I say we have to listen to the story it's telling and where it is telling it. So examples of continuation patterns are inside bar. We have 3 white soldiers and 3 black crows. Then we have the indecision patterns. Indecision patterns can be both reversal and continuation, but most times they are neutral patterns. It only shows moment of price indecision of either to go up or down. In other words, it shows equal strength on the side of both bulls and bears. Examples of indecision patterns are doji and spinning tops. If you note what I wrote here, I said They can both be reversal and continuation, but most times they are neutral. That is because indecision patterns are truly neutral patterns. But when it combines with some other things, like you saw in the previous slide, where you have morning star and evening star, these are dojis. This is a doji star. This is also a doji star. But combined with some two other candles, it forms what we call the morning star and the evening star. And where it has formed, top of the trend, bottom of the trend. So it becomes the morning star, which is a three candle formation, but no longer a single candle formation. While majority of the neutral candles or the neutral patterns has the single candle formation, where it forms alone. But the moment it turns to three, like this, if you have a downtrend going and you have a doji star like this before the formation of the green candle here, it is a doji star until this candle forms before you class the three as a morning star. So let's move on. Pin bars. Pin bars are single candle patterns. Pin bars or hammers, as they are also known as, are the most common candlestick patterns. They are also one of the highest probability reversal patterns there is. That is not to say there are no pattern failures. In fact, there are a lot of pattern failures as well. This is why it's important to see the region where it has formed and the story it is telling. There are four variations of pin bars, which are hammer, shooting star, inverted hammer, and gimmer. Hammer and the shooting star are the most common types, and for this to be valid, they must have long wicks that stand out from the other candles and close in opposing direction, or rather past the open of the previous candle. The candle body should also form towards one end of the candle and not in the middle. This is because if it forms in the middle, it is no longer an hammer or a pin bar. It becomes a doji or a spinning top. There is tiny difference between a doji and a spinning top, and there can be tiny difference between a pin bar and a doji. So you want to pay attention to that. And this was the example I got from my chart, which we have the hammer, which it is the one circled in red, this single candle formation. As you can see, it has a long tail, which is a wick, but a very short tail to the top, which is a wick to the top. It doesn't matter that the wick may not be longer than this. The wick can be longer than this, but you want the tail to be longer than the head. That is the wick to the top, which is what I'm calling the head, and the wick to the bottom is what I'm calling the tail. You want the tail to be longer. And as we can see in this particular formation, the moment the hammer formed, it caused a bit of reversal. And here again we have the hammer again. As you can see, here seems to have no wick to the top at all, but just a long tail. And the long tail is exceptional to everyone that has previously formed. If you look at here to the tail, is exceptional. And here we have the shooting star. As you can see here, we have the wick to the bottom, but it's shorter than the wick to the top. This is because the shooting star is a bearish reversal pattern. So whenever it forms, you expect it to be bearish, and it is telling a story. The hammer is also telling a story. I'm not going into that story at this very moment, but once we open our chart, I will be telling the stories. Then looking at the angima. The angima is just like the hammer as we have here, but the position of which it has formed is what makes it different. Mind you, the candlestick color of this being green for the hammer, and this being red for the shooting star, and this being red for the angima doesn't really matter. The color doesn't really matter. It is the body formation, the body of the candle now, and the wick formation that we are looking into. This can end up being green. This can also end up being green, and then it will still lead to the reversal. Whereas this can end up being red as a red candle, and then it will still cause the reversal we need. So the color of the candle at which she ends up with doesn't really matter, but the body size, and the wick formation. Now look at this. People will wonder, why should this cause a bearish movement? Because it has a long tail. This shows that bulls are pushing back price up. But there is another story to it. Bulls are really pushing back price back up. But then what of the other story is telling? We will go into that when we are on charts. And this, we have the inverted hammer. They call it the inverted hammer, but they call this a hanging hammer. And then they call this a shooting star. I am not the one who named this, but then it depends where it has formed. It is an inverted hammer and it is a bullish reversal pattern. And if you notice, the candle color is red and it leads to a bullish reversal. So the candle color doesn't really matter on any of them. What matters is the wick formation and the body formation. So that is a pin bar. Once we are done with the slide, I want to finish the slide first. Then we go into the charts and we revise everything we have done. We have the engulfing candlesticks. So this is a 2 candle pattern. They can form as both continuation pattern and also reversal patterns. They are common as well and forms when the body of the second candle totally engulfs or swallow the body of the first candle in the formation. There are 2 variations of engulfing candles or engulf, which are bullish engulf and bearish engulf. Even because we have 2 variations, which is bullish engulf and bearish engulf, we have another pattern which is called the outside bar, which people can interpret also as a bullish engulf. It can also be a bullish engulf, yes, but outside bar does not necessarily have to be a bullish engulf. We will go that into details when we are on the chart. So this pattern is valid once the body of the second candle closes above the open of the previous candle in bullish engulf and closes below the previous open in bearish engulf. In other words, the body of the second candle is bigger and encompasses the body of the previous candle. This tells us that the bulls were able to overpower the bears, or the bears were able to overpower the bulls. Like I said earlier, there are different stories, even to the same patterns, that can show the strength of a pattern. I was just talking about this on the pin bar slide. So here we have a bullish engulf, where we notice this body of this reddish candle is totally consumed by the body of this red candle. Also, we have a bullish engulf after, and then another bullish engulf, where we have the body of this red candle is totally consumed by the body of this green candle. Here we have a bearish engulf with the green candle here. The body is totally engulfed by this body of this red candle here. Here again we have the bullish engulf, which this is one, and this is another one. And here we have the bearish engulf, which the body swallows the body of this green candle. And then here again we have this engulf, which swallows the body of this candle. So from looking at this chart alone, you can see that this is a reversal pattern as well as a continuation pattern. Price was falling down, it made an engulf here. Price tried to come for a retest and then formed another engulf, and the price continued back up. This signified the end of the trend, while this thing was signified a continuation. As we have here, price was rising, it made an engulf, and the moment it made an engulf, price came running down. This came back up, it didn't even quite get to where the engulf happened, only to continue further down. And as we see here, price was coming down. Even we have an engulfing bearish engulf here. We have a bearish engulf here. So what happened? It didn't quite lead to a new, or it didn't quite continue the bearish movement because it's formed at the bottom. What happened? Bulls were just able to overwhelm with a new bullish engulfing, which was here. Then the price broke up. As it came up, formed another bullish engulfing, and the price continued to the upside. And as we can see here, bearish engulfing probably signaled the end of that trend, came down, formed another bearish engulfing, and price continued downward. So these patterns are not only reversal patterns, they can be reversal patterns. Likewise, they can be engulfing, I mean continuation patterns. Sorry for that. Then we have the inside bar. This is a 2-candle pattern where the second candle is completely contained within the high and the low of the previous candle, which is referred to as the mother bar. This is like the opposite of the engulfing candle. The engulfing candle, the current candle, is the one that engulfs the previous candle's body, whereas this inside bar, the previous candle is the one that engulfs this current candle within its highs and its lows, not just the candle body now. This shows a slight pause in price movement and most times continue in the direction of the mother bar. Sometimes they act as reversal patterns, technically looking they act as reversal patterns. That's it, full stop. Technically looking at it, if there is a lower high and a lower low to a previous candle, that forms a symmetrical triangle, which is a symmetrical triangle sharp pattern. Like, let me quickly show you an example of that. Like, we have candle formations like this. Then we have a lower higher low, then a lower high, then another higher low, and another higher high. That forms a triangle like this, which is a symmetrical triangle. So if you have a candle like this and a candle like this, you can also connect the highs and also connect the lows. That also forms the same patterns, which is a symmetrical triangle. And as we know, they always break out in the direction of the previous price movement. So if it's coming from an upward, then forms the triangle, it always breaks up. If it's coming from a downward movement, then forms the triangle, they always break down. So whenever an inside bar causes reversals, it becomes another pattern known as 3 inside out. That is another candle pattern. So whenever the inside bar causes reversals, it becomes another pattern known as 3 inside out candle pattern, which is quite similar to the inside bars, but it is a 3 candle pattern and the difference is a 3rd candle. So you can have an inside bar formation, and until that 3rd candle forms before you can call it a 3 inside out. Some people will call it 3 inside up or 3 inside down. This type of pattern mostly occurs when a trend is nearing its end, while inside bars occurs mid-trends. That is the difference between the two. So when you spot an inside bar at the bottom of a trend, you may predetermine that it's gonna be a 3 inside out. And if it's from mid-trends, then you believe even it will still have a 3rd candle, which may also break out. So you can still refer to it as 3 inside out. But then an inside bar is an inside bar. So, like I was saying, a pre-guess that the inside bar will lead to reversal often happen if it forms after an extended trend, with price moving in the direction of the inside bar color. Sometimes there is extended or multiple bars inside of the mother bar, so a breakout in either direction is expected before a direction is done. And looking at these diagrams, these are inside bar where we have a bullish move, then we have a pause, and we have a candle contained within these highs and these lows. Sorry about that. Where we have this candle, this high and low of the candles of this particular candle is totally contained within the high and the low of this particular candle. That becomes what we call an inside bar. Here as well, it's also happening mid-trend, where we have the high and low of this candle is contained within the high and the low of this candle, and then we saw it continue in the direction which price was coming from, like we saw here as well. Here is an extended inside bar where we have multiple bars inside of this particular single bar, and here was the breakout. It's also offered a continuation pattern. Here we have this green move and this bullish move, which is a single candle, then the next candle being an inside bar to it. Probably we would have expected it to come up or go down if it were to be a 3 inside down, which is also a 3 inside out candle formation. But then instead of that, we saw another bearish candle still contained inside of this candle, And normally, if we spot this on an over a larger time period of candlesticks, we will call this a range or consolidation. So this is also a range or consolidation. That is another name we can call inside bars. When you see a candle and every other candle like this are contained within the highs and lows of this candle, that is also a consolidation. Then the breakout to the top happened here, which means at the end of the day, it still continued as a continuation pattern. Then looking at this point, we have this candlestick formation, which is a bullish candle coming from a bullish movement. Then this inside bar formation happened. This hasn't happened by then, so you refer to it as an inside bar. Then normally you expect it to break to the upside, right? But what happened is we saw it moving, pushing price back to the downside. Another candlestick formed, which became a single candle extended inside bar, right? This could have been the candle that broke to the downside, but it didn't. Then we have the third candle breaking to the downside. So this means this particular formation, we may no longer call it an inside bar, but a tree inside out. But then it just missed by one, because in a tree inside out, this should be the one breaking down. But if this also still broke down, it's still the same thing. Just that it didn't cause continuation, but it caused reversal. And for it to cause reversal means it is a tree inside out candlesticks pattern. So where we have the first candle, then the second candle being an inside bar, and the third candle breaking down on the reversal. If it has continued in its direction of previous movement, then it will be an inside bar. So let's continue before we go to the charts to identify all of this. So we have the three white soldiers and the three black cross. These are continuation patterns as well as reversal patterns, which can form at the end of a trend or middle of a trend. This consists of three candles, with the first candle being the smallest while the third candle is the largest. The increasing candle sizes show increase in upside or downside momentum, and so signal price's desire to continue in its current direction. It can be formed mid-trend or at the end of a trend to signal reversal of trend. People can often misconcept this with a three-candle bullish move, as these are often not common. Not common doesn't mean it doesn't happen. They are just not common. It's very rare. For a three white soldiers to be valid, the following conditions has to be met. The second candle's body must be bigger than the first. The low of the second candle must not invade the open of the first candle. The candle should close above the first candle size. The third candle must be the biggest of the three, which means the first candle is the smallest. The low of the third candle must not invade the open of the second candle. The candle should close above the second candle's high. So as we can see, this is not an easy thing to achieve, especially looking at the wicks formation in cryptos. As you know, FS is a bit conservative with wicks. And for three black cross, the inverse of this is true. So looking at the image now, this is an example of a three white soldiers, where we have this candle formation, small wick, some wicks to the bottom, but small body. Oh, this is not even a valid one. I made the mistake there, because the wick of this second candle invades the open of this first candle. So that is not a valid three white soldier. I didn't quite notice that. But let's look at the body. The body size of this is bigger than the body size of this first one, and the body size of this third one is bigger than both the first and the second. So looking at the three black cross, it is the same thing but different name, because one is bullish, one is bearish. So we have the highs here, we have the open, we have the low. We have the candle body, which is okay, and the second candle's body is way bigger, right? The eye of the candle did not invade the open of the candle. Likewise, the third candle in the formation is bigger than both. The high did not invade the open of the second. So this is a valid 3 black cross. And as you can see, price was rallying up, then this 3 formation came. So when you see this formation, what do you expect? You expect a continuation to the downside. That was why I said it can be a reversal pattern because it happened at top of the trend, and continuation pattern, which means the moment it has formed, price is likely to continue moving downwards. As we see here too, it happened just a bit at the bottom of the trend. Then we have what we call a money star here. This is a spinning top, this is a bearish candle, and this is a bullish candle. So we have a money star formation here, and then the moment the money star formation formed, price was trying to go up, then it formed something that looked like 3 white soldiers, but not quite 3 white soldiers because this week invaded the open of this particular candle. So that is not valid, but it's still inserted into the same thing we would expect. So moving on, we have the doji and the spinning top. This is a single candle pattern and an indecision candle where a candle closes almost exactly at the open, leaving little body to no real body, much like a cross or a dash. They are similar to spinning tops in that they show the bulls and bears are engaged in every battle, with neither side able to gain the edge over the other. Doji candles are mostly neutral candles where price can go in either direction, but sometimes some type of doji formed at the end of a trend can cause reversal. That is the morning star and the evening star formation we had, where the doji star formed a pattern which led to reversals and it became the morning star and the evening star. There are 3 common variations of doji. They are Dragonfly Doji, Gravestone Doji, and the Doji Star. Dragonfly and Gravestone Doji forms at the end of a trend and usually have long wicks, while Doji Star have shorter wicks. Spinning top on the other side has a small body, where we have a very tiny body for the Dragonfly, the Gravestone, and the Doji Star. Spinning top has a bigger body than them. So has a small body with wicks and do not close exactly where it has opened. No matter what pattern you look for, no matter what pattern you look at for reversals, price candle tells a story, and it is that story that matters, not the pattern itself. The pattern can form at any point and it won't lead to reversal or it won't lead to continuation. When you expect it to lead to continuation, it will lead to reversal. When you expect it to lead to reversal, it will lead to continuation. So, no matter what pattern you look at for reversals or continuation, price candle tells a story, and it is that story that matters. Look at it as a neutral battleground where the warriors of bulls and bears get to battle. Whoever gains more ground wins that ground. There are many other price action patterns or candlestick patterns that I cannot talk about, of course. But you can find them on the TradingView. TradingView now has a section for candlesticks pattern under the indicator tab. So now let's look into how we can actually use price actions to tell reversals without the use of volume. This means we have to look into the chart now and then take it from there. We will go over everything we have discussed here, but with little time. So we will move fast. So let's start with pin bars. So as you know, pin bars, I said, they have long ticks, lesser head, which is a wick to the top, but longer wick to the bottom. That is for hammers. But one side has a longer tail, while one has a shorter tail to the top. Then they have small body, not necessarily small, but the body is formed to one side of the candle structure, of the candlesticks. Like if you take 100% of a candle, assuming this very candle, you take the highs and the lows like this. You take the highs and the lows like this. the candlesticks, the body is formed below or above the 50% range of that candle. So looking at this range, we can easily assume that this is the 50% or the mid-range of the candle. So the body is formed above or below. That is what forms a pin bar. So here, if we try to remember, we can easily see that we have some pin bars on this particular chart. Again, here is the hammer, here we have the shooting star, here is the hanging man, here is the inverted hammer. So let's see what we can see on the chart. If you notice, here we have the first hammer. Oh, sorry about that. Here we have the first hammer. I hope you can see that clearly. This green is the first hammer, and as the candle, so I mean as the movement was downward, then the hammer formed, and now we are trying to see a green movement. What's now, let me tell the story behind this. The story means in the last two candles just before the hammer, what did we see? We saw that price was in a complete downtrend on that two candles, not a long-term downtrend right now. As in, candle was in a downtrend on these two particular candles. If you look lower, you will see it's still a massive downtrend. But then, what do you expect? For this to be the low, let me remove this box, it's disturbing. For this to be the low of this red candle, what do you expect the moment this low was made? And what do you expect when the high of this particular candle is a lower high to the high of this candle? Normally, a trend is a series of lower highs and lower lows, right? That is for downtrend. So you have something like this. And what did we see here? We have this size and this low. We have this lower highs to this and this lower low to this. Now we have a lower low to this and a lower high to these highs. So that means we still have this bearish structure in place on this particular three candles. But then a reversal came. This can easily be said to be the highs, this particular candle size, which is this size here, to be the high leading to the lower low. Even though it closed bullishly, that means what just happened was that price came back from this particular low the moment it was made and closed something like this. It closed bullishly. So the break of these highs will signal reversal in pattern, which happened on this particular candle. When these highs, which was here, as the moment this candle opened, we had a low here, which ended up being an higher low, and then we saw an higher high to this particular candle, which means the structure at this point has been broken. And the break of this structure started with this pin bar here. So what exactly transpired on this pin bar? The moment you have this bearish structure in place, BS were still in control. The armies of the BS were winning the ground. They have conquered this territory. Now they are onto this territory, and they were able to push price from the open to the lows of these candles, which means here they were able to push price from this open here to these lows, which means they were in control. But something changed. It was like they found what we call support around this particular lows, which means the army of the bulls or the bulls presence became obvious. They came to defend this particular territory, thereby pushing back into the grounds conquered by the BS, which is at this particular level here. From this point to this point, it showed clearly that the BS were in control. But then for bulls to be able to push into the region or the grounds conquered by the BS showed that the power of the bulls is coming, or the bulls are becoming very strong, either through reinforcement or through whatever means. It showed the bulls are taking control. There is another thing for this candle to close bearish, but just below or just above these particular lows. That one we will still say the BS are in control. even if it is a pin bar, you will still say the bears are in control, and you will be skeptical that it is likely to lead to a continuation rather than a reversal. If I am trading and I'm looking for a setup like this, I want the close to be green, which means it will definitely show me that the control of the bulls are strong. They were able to take control back from the bears. The bears were active all the way from this point down to this point, but then the bulls came and pushed it back into the region previously conquered by the bears, and then they ended it like that. There is thing from the bulls. It shows when the next candle opens or the next battle day, you want to see a continuation of the fight and the continuation of serious strength from the bulls in order to defend or guide or fight against the bears. Likewise, the inverse of this, when it happens to be a shooting stars. I hope we see that again. Now, look at this again. Here we have another hammer. Here we have another hammer. Price was in a constant downtrend. Then this hammer formed. And then we saw it leading to what we call a bullish engulfing candle. Here is a bullish engulfing candle because if you look at it, the body of the red candle is totally consumed by the body of the green candle. So that is a bullish engulfing candle. But before the bullish engulfing candle formed, where you see the one pattern candle, what you saw was an hammer. So what transpired at this battle of the bears and the bulls? We saw the bears were already getting weak from the formation that happened all the way here. Here we saw big momentum sell-off. Then here we saw the pattern sell-off, which means the momentum of the sellers were getting weak. This was the low made, and if you notice, there was no close behind or below this particular low of this candle. Candle did weak below it, but there was never a close below it. This particular candle formation here can be a spinning top, which is a form of doji, but it is a spinning top because of the body. So now let's analyze this. Now we have a big sell-off. This candle making a loss. That means the bears have won this ground and this ground. But what do you expect them to do next? You expect them to still continue pushing down and winning more grounds. The bulls were able to put up a little fight here, which also got overwhelmed by the bears. The bears were able to overpower them, leading to a bearish engulfing candle. For this to form, you expect a continuation, a strong continuation to the downside. But then, this was the last solid ground the bulls were defending. The low is like the last line of defense for the bulls. So they were defending these lows. And on this particular candle, we saw the bulls, the bears were able to push the boundary into the region that the bulls are defending here. At this particular candle's low, that is a low there. So we saw the bears push the boundary. This is the boundary that was last defended by the bulls. So they push the boundary up onto this new boundary here, which the bulls were weak as well, that they were asleep, but it didn't show good strength on their part. But then they were still able to guard against it and push them back outside of the last boundary. It is like a wall. Probably your wall has been invaded, but the moment you realize that your wall has been invaded, you were able to rally around again and push the invaders outside of the wall. That shows you have strength, and it also shows you have weakness. You have weakness in the sense that you have allowed invaders to invade and break your boundary, which is your wall or the last line of defense. For them to be able to gain ground into this house or into the compound, it means something is wrong somewhere. So it also shows weakness on your part, even though it also shows some strength that you were able to quickly rise up to the occasion and push them back outside the wall. As you can see here, the wall was still guarded again. Then here, the same thing happened. The boundary or the wall was invaded again. It was invaded, but then the second invasion or the third invasion, you were also able to rally around and push them outside of the wall. And then what happened after? You showed some strength. just to keep them away finally. It's like the pushing them outside of the wall is no longer hit. You push them outside of the wall, then you push them far away from the wall, which led to this bullish engulfing candle. And the moment other people see this bullish engulfing candle, what are they going to do? They are going to continue in helping you to push them even further away. I hope you understand the little story analogy. So the last line of defense of the bull, the new one is this: you do not want to see this low break, assuming we had a close below this low. That shows that the bears will still be in serious control of this ground. They will keep winning ground until the bulls were able to show strength. So this was a point where the bulls were able to show strength, because the bears, looking at the top upper wick, the bears did not give chance to the bulls for them to push price up. They did push it up a bit, but they didn't give them chance. They pushed the price back down further into their grounds, into their wall. And the moment that happened, maybe the world soldiers were defeated and then they gained ground into your own ground where you have walled. Then the moment you realize the weakness on your border part, on your border side, you were able to raise more soldiers and then push the bears out again. And this happened with some reinforcement. It closed as bearish, but it closed outside the border. This could even be the new border now. But then it closed just outside the border. So for this to happen, you expect the army of the bulls to see how the desire to keep fighting, to see how the power they're using pushing these people out of their grounds. They should have it to push them away, which was what they did here by bringing this bullish engulfing. And then the moment this bullish engulfing formed, what happened? It's the rest is history. We saw the bears were trying to invade back at this low, but on this bullish engulfing, what did we see? We saw that they met stiff resistance and they met the armies of the bull, which formed another pin buy here and a spinning top here. We can even call it an armor too. It's an armor as well, but it has a tiny body, so more like a Dragonfly Doji. That is the second one here. More like a Dragonfly Doji. We have an hammer here, another hammer. The moment they were trying to invade, testing the waters again to see if you are once again asleep, that is the army of the bull, or you are still at alert. Then the moment they try that, you show them alertness, which this hammer then formed. As you can see, they didn't give bulls more chance at the upper part. They pushed price down, but they met strong army who then pushed them back beyond into their territory, and then this dragonfly formed. Then the rest became mystery. That is the same thing we are witnessing here. The bears were in control. Then the army of the bulls are waking up to defend their territory. This low was the last low they defended, because for them to be able to push price back a little, it showed that there was some bull action. But for you to see this low means the bears were still in control as at that time. But for you to close like this means the bulls are probably getting stronger and stronger. They are finding their energy from somewhere. So they are able to push back the army of the bears in and into the house, the ground of the army of the bears. This was the last line of defense where the army of the bears stood ground, and that was where the price closed. That was where they closed that battle for that particular day. And for this next day to invade into their grounds, which is the body of this candle, it showed strength on the part of the bulls. So you want that strength to continue. But if that strength could not continue, that shows that the bulls are still weak. But on this occasion, and on this occasion, we are seeing strength on the part of the bulls, which is why I expect Bitcoin to still rally up. This reddish candle now didn't show a good strength on the part of the bulls, because they made a line. They fought up, they brought the battle up into the bears, but the bears were able to push them back down and invade their territory. Now, if such thing happens, what do you expect? You expect the bulls to still have that strength to continue pushing the bulls into their ground. They did that by making a lower low to these lows. And as you can see, we have this high, we have a lower high. So we have a lower high here and a lower low here. But it's like the bulls has taken back control, pushing into the region that the bears have previously conquered. So it is a battle of bulls and bears. Now, that is for the pin bars. Now let's see if we can get one other example of pin bar. And then this is another pin bar, which is also an hammer. This formed as a continuation. As you can see here, we have this shooting star here. We have the, I don't know if you can see that. We have this shooting star here. This particular shooting star. The trend was going up. We have this spinning top. Then we have this shooting star, where bulls opened the ground there. They didn't, the low at this candle's low showed that the bears gave no chance at all to the bulls, gave no chance at all to the bears. And the bulls pushed the price up to this particular highs. But they met stiff resistance and the bears were able to push the price back down. Now, this was what I was trying to say earlier. The candle ended up closing as green, which is still a shooting star, right? But it closed as green, which shows that the bulls still have some power to defend some grounds. I wish this has closed as reddish candle. I wouldn't expect this continuation to the upside to continue. I will expect at least a bit of a downside, even if the bulls will show control. But closing as green still shows some efforts on this part of the bulls. I wish this has closed as red. It shows that the bears now have completely overtaken the bulls or overpowered the bulls. And let's look at it. As you can see, shooting stars. This is another shooting star here. As you can see, the moment the shooting star formed, we saw price coming to the downside. This could be an hammer, but the body is just big. And the wick is okay. The body is also from above the 50% range. So you can still say it is an hammer. And what happened after the hammer formed? The low here didn't get invaded. But then we saw it rising to the upside, but little effort from the bulls. Now look at this. We saw this, what's it called again? This shooting star, and then we have this hammer. Price was coming up, this shooting star formed. Like I said, I would have expected it to be red for me to know the bears are really serious and mean business. But then the bulls still show some strength in showing that they are still in the game, even though the armies of the bear is overpowering them. But they are still standing their grounds, like the 300 patterns. Then what happened there? The bears showed completely insane effort, not allowing the bulls so much, but pushing the price insanely down, even down past the grounds conquered by the bulls on previous occasion. This is the first, second, third, and fourth. Almost the fifth. So like the fifth ground won by the bulls, the bears showed control over there by pushing the price up to this low. Then what did they meet? They met stiff resistance from the armies of the bulls by pushing them back again upwards. This shows that the bears still standing their ground, but for them to invade like 4-5 houses and then get pushed out of the 5 houses all at once, it shows the bulls are really serious. Then in case of this is an hanging man. It could lead to reversal, because for the bulls to allow the bears to push price down up onto 1, 2, 3, 4, 5, it showed weakness on the part of the bulls. So this is an hanging man, and for this to form, you expect the bulls, no matter, in as much as this isn't close as green, it closes as red, you still expect the bears to at least try again to invade and reconquer these grounds they were pushed out from. It shows strength from the bulls, but it showed weakness on the bull side, and you expect the bears to at least try again. But at this point, the bulls gave them no chance. They tried by pushing the price to these lows. They tried, but then the effort wasn't just enough. It seems the army of the bulls were completely alert at this point, and they pushed price up. So that is how you can use these things to tell stories. It's actually easy when you understand what is going on. Now let's look at this. This is not a pin bar. This, we have a doji here. This seems like a doji star, but it has a long wick, so it can also be a dragonfly doji. So what happened here is we have bears pushing price down. Then it came to a point of indecision. looking at this wick completely, the lower wick is higher than the upper wick, which means bears tried pushing price down, but then the bulls were able to overpower them. That is what the long wick means. And then look at this exactly. Look at this. Look at these very lows. Sorry. Look at these very lows here. Look at these lows. That was the last line of defense for the bulls initially, right? When price came down all the way from here. This was where the bulls defended. And if you look to the left of the chart, what did you see here? You saw a bullish engulf at this particular point here. So it's like the bulls defended this zone or this region by making here the last line of defense. What happened on the next candle formed? You saw that bears tried to push price down, but the bulls didn't quite allow them to get to that first last line of defense. If this were the world was built by the bulls to ward off the invaders of the bears and push them back into their ground a bit, even though they stood their ground, but it was close. Where the battle started was where they pushed the price back to. Then they invaded the bulls again, but the bulls quite defended this area even a bit further up by not allowing them to get to this last line of defense, creating another last line of defense. On the third candle, what happened again? We saw the lows even far away from the last lows, which was where they defended. And when you see this kind of formation, it shows strength on the part of the bulls. It means you are having a series of higher lows. Even if you do not have a series of higher highs right now, but it shows you have a series of higher lows, which shows that the bulls are in control. At least if they are not yet fully in control, at least they are guiding their borders. This was the initial border. Then they didn't allow price to even get as low as that, which they defended it. Then the third candle, the low was even quite higher. Even looking at the fourth candle, the low was even higher than this. That means they are defending prices and fighting against the invaders of the bears from invading their lands or invading their region, invading their grounds. So that shows strength on the part of the bulls, and at a certain point you expect them to be able to completely overpower the bears, which they did here. And when price came back into these conquered regions by the bulls now, they defended it and it formed an armor. And with the armor, they were able to push price back up. So let's look at another pattern. At least you know this method of telling stories or reading stories now. So let's look at bullish engulfs. Let's look at the engulfing candles now, how we can understand them. Now let me see. Okay, we have an engulfing candle here, and I've explained this. What happened was the price was coming, the bulls fought them back, defended the last border. They were invaded quite all right, but it showed that the bull had reinforcements, and the reinforcement was just enough to bring the armies of the bulls back into control, and then they won their lands back. And when that happened, the power of the reinforcements was large enough to cause them to even open the new battleground strongly by not giving chance. If you look at the wick at the bottom wick is very small, so they didn't allow the bears much effort at all. After this spin back form, they didn't give the bears much effort. They took control. And if you look at the upper wick, they gave the bears little chance. The bears couldn't even push this price back down. The same way they couldn't push it down from the opening is the same way they couldn't push it down from the closing, which means the army of the bulls, the reinforcement they had, was quite strong enough to push the bears back into their territory. Now look at this. You have different types of bullish engulfing, right? And let me make a quick demonstration of this. I will talk more about this and the supply and demand lesson. So let's quickly make a scenario like this. Here, assuming you have a red candle. You have a red candle like this, and you have a wick to the bottom and a wick to the top, and then you have a bullish engulfing candle. So it closes here and it engulfs like this. Say you have a wick to the top. You have a wick to the top. You also have a wick to the bottom. Like this. This is one. Let's make that one. Then let's do another one. I want to show like 3 different examples here. Then you have this. You have this. You have, okay, let me draw the red first. You have this bearish candle and this bearish candle. You have a wick to the bottom, a wick to the top, wick to the bottom, wick to the top. Now here you have a wick to the bottom, a small wick or large wick to the top, doesn't really matter. Then, okay, this should even be shaded. Then you have something like this. I just change this. So let's cancel this. I will redraw it. So you have this. You have this red candle, a wick to the bottom, a wick to the top, a wick to the bottom, a wick to the top, like that. Then you have the engulfing candle, like this, with a wick to the bottom and a wick to the top. Now, okay, let me do it like this, like a wick to the bottom, a wick to the top, or even if this wick is even shorter, it doesn't matter. So looking at these bullish engulfing candles, are they exactly the same? They are all engulfing, being the fact that they overpower or encompasses the body of this bearish candle. So they are bullish engulfing. But what story are they telling? They are all telling different stories. They are all telling different stories, not just with their body, but with the wicks. This now can be an outside bar, like I mentioned earlier. An outside bar, which is also a bullish engulf. But look at this. We have this low to this low, which shows an higher low. I just talked about these lows right now. Then we have an higher high here. So we have an higher high, an higher low. And then look at this. We also have an higher high here, but then this is also an outside bar. But then it is also an inside, a bullish engulf. But the close of this engulf is just within the eyes of these bearish candles. They are all engulfing candles, but they tell different stories. I won't tell the story they tell now until I get to the supply and demand lesson. So let's see if we can get a bearish engulf. Okay, here we have a bearish engulfing candle where the bulls were in control. Here we have a doji. This can be a doji star, almost equal amount of higher wick and lower wicks, tiny body. So that is a doji star. And then we have this bearish engulf. And if you notice what I just said here, what did you notice? We have this size and we have this side here. This means the bears were defending their border, right? The border they last defended against the bulls, which was here. They are defending it by not giving the bulls any chance at all. Let me just say it. This shows strength on the part of the bears. They giving no ground at all to the bear, to the bulls, shows that they are serious and they mean business. And then they push the price way down. Even though the bulls were able to push back a bit, but what we will see in the next candles, the bears were still able to overpower them. And then before the bears became weak. That is the story for this. The story for the other ones will be said in a supply and demand lesson. So here is another bullish engulf. And if you notice what I just said, here is a low, here is another low, which shows little chance on the part of the bears. They were not giving chance at all. And that is the story. You just have to tell the stories of what transpired between the candles. Now look at this. This is not a shooting star. It is neither a doji. It is not even a spinning top. It is just a normal candle formation. But what did they do? You saw the bulls were in control. The bulls were also given chance to come up, creating an higher high here. But then the bears took control by pushing the price back into the mid-range of the ground swarmed by the bulls. This is a tweezer top. It is not one of the patterns that I talked about. This is a tweezer top. So the bulls were in control by gaining ground, creating an higher high to this. This was the last line of defense of the bears, but the bulls broke it. And once that happened, either by reinforcement or by other methods, the bears were able to push price back down into the mid-range of the grass once conquered by the bulls. And what happened next? We saw this big bearish candle coming, which shows strength on the part of the bears. Before the bulls then started finding grass again, trying to defend these levels. So let's move on to inside bar. As you can see again, this is another bearish engulf. This is another bearish engulf. We'll talk more about the bearish engulf and inside bar on the supply and demand lesson. So let's try and find an inside bar here. Let me show you what an inside bar is again. Okay, inside bar is this is a 2 candle pattern where the second candle is completely contained within the highs and lows of the previous candle. So let's quickly see if we can find an inside bar here and see what happened after it formed. There is, like I said, there is TradingView as this price action candlesticks. This is an inside bar, but this is just too wide. So I do not want to use this because this is just too wide because of the wick. Sometimes we have false positive. I don't know if this is an inside bar. Oh no, it is not. So let me go on a lower time frame. Hopefully I can find this. But nonetheless, you already know see a spinning top here. This is a spinning top. I'm just showing you the way I'm saying it. This is another spinning top where you have a little candle close. A little candle body. Then you have the upper wicks and the lower wicks. That is a spinning top. It also leads to reversal. And once this happens, exactly, once this formation happens, this is what you can refer to as a morning star, right? This formation is something. At times, it may not be as bullish as this, so to just close around there. So that is what you can also refer to as a morning star, which is also a reversal pattern. As you can see, we are doing all this without the use of volume or any indicators. We are just reading what price is doing. This is another tweezer top where bulls were giving ground. They were giving chance to invade the house of the bears. But then, and looking at this candle, the bulls were quite strong. But then from this strength to this weakness on the bull side, it showed strength on the part of the bears. They tried to push it back up using this spinning top, but then they met stiff resistance on the part of the bears, which push price back down. Sorry, I'm still looking for an inside bar. Seems inside bar doesn't form as much on Bitcoin. Let me change this coin. Let me see ETH. Okay, this is an inside bar. We have this size, and then we have these lows. And what do we see? We see the high and the lows of this candle encompassed within this particular candle. The next candle, it tried to make a continuation to the downside, but a massive resistance on the part of the bulls. So this will be a fake out. We have fake out also with using this pattern. There are fake outs. So it became a fake out because some people will place a sell stop at this point. So once price breaks down, they should sell and then ride the trend down. Some people also have a buy stop at this top. So once it breaks up, they buy and then they ride the trend up. So what happened here? We had a fake out. Then we have this bit of bullish engulfing candle. So that is two patterns almost in one. We have a bullish engulfing candle. The lows of this is higher than the low of this. This is also an inside bar. And like I said, if it becomes a resistance, I mean if it leads to reversal, then it becomes a 3 inside out. But this is not a 3 inside out. This is an inside bar which was faked out. Then we had a bullish engulfing showing strength on the part of the bulls and their willingness to take control. So that is one of the inside bar. I'm trying to see if I can get any other one. Okay, I have another one here. So this has a nice here. Oh, okay. This have a nice here. And then we have a low here. And as you can see, this inside bar, his body is completely engulfed or encompassed within the bodies of this. And then what happened? It led to continuation from the previous movement. We have this move, then this inside bar which serves as a form of consolidation or sideways movement. If we go lower, let's go to 30 minutes time frame and see what has actually happened there. You see it's a form of sideways movement. Okay, this is it. This was the height and this was a low. And what do we see? We say the heights couldn't be broken. That is a low. Actually, we also have another inside bar right here. This and this. Then there was a small fake out here, but at the end of the day, it came all the way to the downside. Okay, so that is correct now. So as you can see, it is a form of sideways where there was no defined trend. These lows, no low came below it, and this size, no high came above it until we had the breakouts here. Even this was another this is another inside bar here, right here, where we have this bar and this bar. Then what happened there was it tried to be a 3 inside out. Price was coming down. Then we had this inside bar and price moved up, but then it made a fake out. But on the next candle, we saw it wasn't actually a fake out. It was just a small action, small grab on the part of the BS, but then the bulls took control. So this is a 3 inside out where you have 1, 2, the inside bar, and the third candle led out. 3 inside out or 3 inside up, as people call bullish one, and 3 inside down for the bearish one. So that is an example of the inside bars. We will also talk about these inside bars when we do the supply and demand lesson. The bullish engulf, the inside bars, the pin bars, they are all essentials when we talk of supply and demand. So let's look at the next pattern to discuss. Okay, the 3 white soldier. This is actually very hard to see. I don't know if I can get anyone on this particular chart at this very moment. This could have been a good one, but then look at the third candle, it became weak. So this is very tricky to find. Now look at this. The body of this candle is quite okay. The body of this one is quite okay, but look at the third one. It's nowhere bigger than this, so it is invalid. The 1, 2, 3 invalid. 1, 2, 3 invalid. So it is very hard for us to see a 3 white candle here, or 3 white soldiers as it is called. It is very, very hard. Even this, the body of this candle is quite smaller than the body of this candle, so it is not valid. The body of this candle seems to be equal to this, so it is not a valid 3 white soldiers. It is very rare to find, because it must show complete effort on the side of the bulls. This candle body, I don't think it is bigger than this. If this is bigger, then it will be a valid 3 white soldiers, but I don't think this is bigger than this. It is not bigger. So 3 white soldiers is very hard to find. And the rest ones, I have shown you the doji. We have talked about the doji and the spinning top, because as I was moving on BTC, I was seeing some. This is a doji candle, and this is called This is a grave, what's it called? The Dragonfly Doji. All these names confuses me. I just look at the story behind it. And when you look at the tree pattern you find here, after the doji has been formed, this pattern, when you take the bearish candle pattern, the bearish candle, the doji itself, and the last green candle, it became a morning star, right? And then it led to a reversal. So the moment you see this, you do not want to take a trade based on the doji alone. Then when the morning star forms, then you have this lows and this low making an higher low. Then this side to this side making an higher high. It shows a change in structure, right? So you can long on close of this candle, or you can wait for a retest of that candle. There is no guarantee that they will always work out, and there is no guarantee or there is no assurance that they won't work out. So you just want to trade with risk management. And once you have your risk management in place, then you won't be afraid to take trades. As you can see on this ETH, the same thing that happened with the Bitcoin, the same exact thing where the price was falling here, then pin bar here, then bullish engulf. We have a pin bar and a bullish engulf. You see these two formations together, a pin bar, which is an hammer, then the second candle formation forming an engulfing candle. That shows that the bulls are taking back control. Then you can long either on close or on retest. More of these price action things in the supply and demand lesson. Now let's look at how we can really analyze and see what happens on a larger time frame trend. Like, let me squeeze this out. Let me use the Bitcoin chart. Like, if you want to trade and you want to see when the bulls are getting weak or when the bears are becoming weak. Now let's look at this move on this weekly time frame. From these very lows, what do we see? From this very low, we saw a parabolic move all the way from here up to there. We saw a very big parabolic move. And what is this parabolic move telling us? This is telling us that the bulls are completely strong. We keep seeing higher highs and higher lows, right? Even when the bears try to show themselves here, it still made an higher low to this, and we had an higher high. But then here we had a lower high and an higher low, which means that could have been a triangle and an inside bar, which means you expect it to break to the upside, right? Then you had a lower low and a lower high to this particular candle. But what did you see? You have this inside bar still intact. This inside bar is still intact, even though you have a lower high and a lower low. But this inside bar is still intact. And for it to form, you expect a continuation to the upside. If it eventually breaks down, that will mean bearish trade inside down, right? But then this little formation of lower highs and lower lows changed the pattern from being a triangle to a bull flag. So you have a lower highs, you draw it, then you have a lower low, you draw it. You change the pattern to being a bull flag, and you still expect it to break to the upside, which means you expect this inside bar pattern to lead to the continuation of movement, which happened here. Here we have this bearish engulf. It did fail, right? It did fail, even though we had an higher low. This is a tweezer top. I didn't talk about tweezer top. You can research more on these patterns. So how do you predict the weakness on the part of the bulls? Sometimes when you look at the strength coming up and you look at the volume, you want to see strength shows the backup of volume, right? But then when you do not use volume to trade at all, you use only price action. How do you predict the weakness on the part of the bears? This is how it is done. Now the parabolic moves are like this, right? They are very, very bullish moves. But when you start seeing weakness on the part of the bulls, what will you see? You start seeing small movements, which leads to a channeled moves. Small movement which leads to a channeled move. Either it is ascending wedge or ascending flag or ascending channel. You start seeing small movements which shows weakness, and this leads to a pattern that a reversal is about to come into the into the market. This parabolic move, you remain bullish. You expect a pullback and a continuation to an higher high. But the moment you start seeing a little pullback, a little higher high, a little pullback, a little higher high, like this in a structured or in a channeled pattern, it shows weakness. So can we really locate this on the charts? I don't know if Bitcoin has this weak movement. Here we saw that this is quite parabolic. We saw a deep correction there, but this high is not quite higher than this size. But that doesn't mean anything at this particular moment until we see what is about happening with this formation is making. If this formation then starts making something like this, a bit of an high, then a bit of a low, then another bit of an high, a bit of a low like this, then what is it telling you? This is telling you that weakness has come into the market. Now let's see how you can also do this candle by candle. Look at this strong move. Let me see if I can get a strong move. Let me see if I can get a strong move from here. Okay, look at this. Right, this is an example of a three white soldiers. Exact example. We have this formation here. This candle body is smaller than this candle's body. This candle's body is extremely bigger than any of the candle's bodies on this formation up until here. So what is this telling you? This is telling you that there is strength from the boost the moment this candle formed. So what do you want to see? You want to see a continuation of these big candles. If it's not extremely big as this, but you want the next candles to be at least big like that. But then what did we see? We saw weakness on the part of the boost. Look at the formation of these candles. Or rather, look at the formations of this candle form here. Up until here. This 1, 2, 3, 4 candles. What were they doing? They are weakness. They are showing that probably the bulls are losing momentum. The bulls are losing steam. This movement is moving to the upside, yes, but it's quite small compared to the growing candle body size that we have witnessed on this part. So for it to be becoming smaller shows that the bulls are becoming weak. And for the bulls to be becoming weak, you expect the bears to take advantage of that weakness and take over the market, which was what we saw here. Even though the bulls tried to move the price up here, but this is what we call a fake out. So you have a move to the upside and the next move, a serious move to the downside. Oh, I've taken away that. Okay, this is it. So it showed weakness, and then the bears took control. But the bulls again made some weakness, some weak movements. If we want this move to continue to the upside, the moment the bulls try to take control back, we expect parabolic moves, right? A sharp movement to the upside. But we didn't get that. After this bearish candle, what happened? We see how the channeled move to the upside. This channeled move, coming from a serious parabolic move, it showed weakness on the side of the bulls. So once you see price action with sharp rise and then a pattern formation like this, you know the bulls are losing momentum. If the bulls are to take control again, you expect a big candle breakout and a bullishly closed candle like the white marabuzo. If not, then you might have something like a fake out only to retest and then come back down. So once you have a strong move like this, you have the first candle body is big, the second one is even bigger, the third one is even bigger. What do you expect? You expect the fourth one to be at least big. But if you didn't get the fourth one to be big, then you get the fourth one to be small, and then the next another one also small, then another one even smaller. That means it's leading to a pattern movement or a channeled movement, which means the bulls are losing momentum, they are losing steam, and then the reversal is imminent. It's only a matter of time, which was what happened here. After this strong move, then this channeled move, which showed that the bulls could no longer replicate the force and momentum they used there. Then you expect the price to come down. So it's a season when you see price coming like this, and then you have this kind of movements. Then in as much as you have higher highs here, you will see people telling you, without even looking at volume or indicator, telling you that, oh, there will be a divergence here. Because there is a strong move, then you have a pullback, Then you have a small move to the upside, which is what BTC just did on the all-time highs. But then we haven't confirmed if it will become a weak movement or another strong movement. Then it comes like this. Then you see another high like this. Then it starts coming back. What do you expect here? It's easy to know. Since this movement is weak, it's easy to tell that there will be a divergence here. You using price action alone, you already know that a divergence or deviation is forming. Those using indicator are now waiting for this to come down before they know that there is a divergence in price, either using volume or using any other indicators. But for you not to see this replication of these bullish moves, then it shows that a divergence is forming. And then at the end of the day, after the shaded mode, you have a move to the downside, either finding support on this low. But this low led to a weak movement, so you either want to find your support or demand at a much lower level. So that is trading with price action and reading price action candles, candle by candle. I have done using the patterns, which is the candlesticks pattern, which is a formation of single candlestick, either the pin bars, I don't know, this either the pin bars or the bullish engulfs or the inside bar or any other one. So also I have also shown you reading candles price action movement on a trend. That is a trend movement where you have high, you have a low, you have an higher low, an higher high, an higher high, and higher low, and then the body of the candle are increasing. And the moment you start seeing small body candle or small movement in price, you know that the bulls have lost their momentum, they have lost their steam, they have lost their mojo, and then the bears may just be around the corner to take control of the market. So that is it with price action. And when you see after this prolonged movement, when you see price making this type of moves, like price is making a channeled move to the downside, that shows weakness also on the part of the bears, right? If the bears were serious, you will see a swift movement to the downside. You will see a swift movement to the downside like this, then a pullback, then another swift movement to the downside. Then you know the sellers or the bears are aggressive. But when you see them making a small movement like this, then this higher high it didn't even close below this lows. Then another one, then to the downside. It shows weakness on the part of the bears, and then it led to a pattern which is derived by the bull flag or the descending wedge, the falling wedge. So as you can see, each price action candle also creates a pattern which can also be replicated on multiple candles, like this falling channel, this descending channel. You can also have a descending channel with just 3 candle patterns, and that is what we call the rising tree and the falling tree. We have the patterns which we call the rising tree and the falling tree. I didn't quite discuss that on this video because I won't be able to discuss all the patterns we have, just the common ones. Even the common ones that we have discussed is taking us over and now 30 minutes already. So what if I want to discuss all the patterns there is? That means we won't finish today. So if you want to deploy the indicator from the TradingView, I think they have it in other indicators. You can come to candlesticks pattern, then you have all the candlesticks pattern you can find. Here we have the dark cloud cover, doji. They have also put a bearish chart or a bullish chart for you to know which one is bullish, which one is bearish. Then we have engulfing, evening star doji, evening star, then falling tree. This was the falling tree I just mentioned. Falling window, gravestone doji, Ama, Angiman, Arami, and so many. They have a lot of candlesticks. So if you just deploy that indicator, it will point to you which one is a doji, which one is a graveyard stone, or which one is this, which one is that. But the most important thing to me is not the pattern itself, but it is a story that is happening. Like here we have bulls in control, only to be overpowered by the bulls. sorry, I meant bears in controls, only to be overpowered by the bulls, which shows that the bulls should become serious or they are ready to defend this region for them to overpower the bulls at this particular region and not this region. They are trying to defend this level. And like I said, the areas where this pin bar forms, you do not want to see a pin bar, just take it. You want it to form at an area of support and resistance, or supply and demand, or where your indicator is crossing up, crossover, or cross under. You want to watch for those specific points. Do not see a pattern form at any point where there is no support, there is no Fibonacci level, there is no supply or demand, there is no indicator crossover, but you just take it just because it is a pin bar. You may get bonds. So you want to be careful of how you apply these trading patterns to your trades. And when we start the supply and demand lesson next week, or maybe in the next video, or in the next 2 or 3 videos, I will be talking much more about the bullish engulf, the inside bars, and the pin bars. I may not really talk much about the pin bar, but the bullish engulf and the inside bars will be discussed at length. So there is not much to do any longer. I've shown you what I can show you, so it's left now for you to at least build on what I have shown you and what I have taught you, which is reading the story or listen to the story the price is telling. If you see a formation of higher lows, it shows, and higher highs, it shows a bullish trend. When you see a lower low and lower highs, it shows a bearish trend. It doesn't have to be like this before you know the trend which is in place. So that is it for now, guys. I hope it is understandable enough. So we may bring some more explanation into 1 or 2 of these later on as the spirit directs. So like I always say, do not forget to subscribe to this channel, share and like it, so we know when you like something and we know when you do not like something. So thank you for watching, guys. See you next time.